Now, as an investor, if I ask you this question, what is the one thing you are sure you can control in the stock market? What comes into your mind? Surely no one in the world can time the market. No one can control how the market will rise and fall. No one has a crystal ball. If an investor said to you he can guarantee your returns in a specific time frame, well, that's a hint to leave, because you can never control what will happen in stocks. Surely if someone can predict stock prices, then why isn't he as rich as Warren Buffett? Why isn't that person on the Forbes list of the richest people? You see, there are a lot of factors that affect the stock market: economy, government, the company itself, investors, etc. If you try to understand everything and try to do the impossible of predicting prices, then good luck to you. As a great investor Peter Lynch said, if you spent more than 13 minutes analyzing economic and market forecasts, you've wasted 10 minutes. But you know, even with all that said, there's still one factor that you can be sure you can control, and that is yourself, your reaction towards what is happening in the stock market. Stock prices rise and fall because of the different emotions investors feel. So why am I saying this? Well, right now the Philippine market is in another cycle of up and down. Just a few months ago, I made a video of the market is up, now what? Well, right now from a high of 7,500, it went down again to 6,500. This is while after all the analysts said that the PSCI would climb to the 8,000 level. These are experts, and yet most of the news is 90% wrong in their prediction. This happens every year when expert analysts predict how the market will end up at the end of the year, and I haven't seen a news that predicted it correctly. Because for me, if you're listening to these predictions, it's nonsense. Even when a company itself is doing well, the effect is sometimes the opposite. The stock price proceeds to go down. Surely those analysts always have some explanation for these things, right? They always have a way to explain the daily ups and downs of the market. They always have a story for it. But as an investor, do you really have to know the daily story? Is it really that important? We'll get to that later on. These are the same cases for those comments you see wherein, why didn't you just put all your money in this company? You could have had 100% gains by now. Then why didn't they do as well? The first explanation for that is, they aren't investing at all. Those investors are the spectators, acting all high just looking at historical charts, acting like experts thinking historical charts can predict what will happen next. If it's that easy, then why didn't they risk 100% of their money into one stock? Same as the comments saying, if you just invested in the US index back then, you'd have twice the gains. Well, why didn't they as well? Why didn't you put your whole life savings into it? I can answer that. Because no one even predicted it would rise to that amount. Back then, a lot was expecting it to crash because it was having all-time highs after all-time highs. It's different when you're in that moment. Instead of just being a speculator and looking at historical charts, emotions play a big factor in your decisions. Most investors, if they risk a lot into one stock, would be stressed out looking at the daily ups and downs, seeing their money being cut by that amount, then ending up selling at the worst possible time because they couldn't handle the big swings. Vice versa, a lot of investors are pulled in when they see news saying stocks would go up, ending up investing at all-time highs, then after the stock market drops. So what does this all connect? How does knowing these things will help you make a better investor? You have to understand that no one can predict the future. No one can control if the stock market will rise and fall, and as well as that emotions play a crucial part. So how can you control yourself knowing all these factors and increase your chance of success or survive going for the long run? First of all, the best thing you can do is to take out the noise. Don't listen to all those haters or the daily news. Chances are it won't help you. It would just add up to your panic state or be the cause of your panic. Knowing that no one can predict market prices is already a big clue to not listen to these projections. That's why in my videos, I never predict what will happen in stocks. I never predict that this stock will go up to the moon. I never make those assumptions because it's nonsense. To keep your emotions in check, you have to take out the noise of others because it will only cloud your thinking and judgment. Let's learn from Warren Buffett himself. He isolated himself in Omaha just to get out the noise of Wall Street. Now, I don't totally discourage you from reading news about stocks. Yes, it's good to get updates about what is happening in the companies you hold. Those are the important news, and I usually validate these things by looking at the company's financials or quarterly earnings. And also the news I look at are the new investments of the companies I hold. So you have to know how to filter it out. There's good news and nonsense. Second, focus on what's really important, which is to invest in strong companies. Want to control your emotions? Then stick to these companies. I always say this in my videos. At which company would you panic if the stock price was cut in half? Company A has strong history of earnings growth, debts are managed well, and give out consistent dividends. Plus, you know you've bought at a reasonable price. Company B, you just went in because it's a hot stock, but the company is booking record low earnings year after year, and it's even negative. Debts are ballooned, and the company is selling off assets or selling shares just to pay it off. Dividends are non-existent, and since you just went in because it's a hot stock, well, you bought at an all-time high, 100 plus price valuations. So if the stock price of these two companies would fall, at which company would you panic? Of course, I'd be worrying night after night for Company B, especially if I put in a lot of my money into it. Meanwhile, for Company A, well, it's giving me consistent dividends and the company is booking higher earnings than last year. Then I'd even be happy that I get to buy it at a reasonable price. So you see, this alone lets you control your emotions well in the stock market. Having a set of great companies in your portfolio would help you sleep better, perform better, and strategize well. With that, you can survive for a long time in the stock market, which is a must because investing in stocks is a long game. No matter what strategy you are using, may it be trading, value investing, or dividend investing, you have to do it for a long period to see reasonable growth in your money. This is real talk. If you think investing would make you rich in months, then you better set your expectations lower. Yes, there are stories like that, but for you to bet on everything for those low probabilities, well, that's a recipe for disaster. Choosing the right companies is something that you can control. Don't just randomly invest in hot stocks just because a certain content creator said this or that. Now, before we continue, if you like so far what you're seeing, these graphs, and since we are already talking about investing in great companies, well, for you to be able to determine if it's a good company, you have to know the performance of that company first, gather data about it, and there's a platform that will help you tremendously in doing this task, and that is simply Wall Street. The way they present their data is so easy to understand. They give you comparisons, charts, and explanations so that even if you're a beginner, you can easily grasp it. They also give you updates on the stocks on your watch list. The best thing about it is, it already filters the news that is important for you, which takes out the noise, and my favorite of all is their portfolio tracker. This way you get to see the health of your portfolio, returns, and everything. So sign up now. They offer a forever free basic plan, and if you want to get unlimited access to all their tools, use my link below and get up to 40 and even up to 50% discount. Thank you, and back to the video. So a combination of taking out the noise and investing in strong companies would already help you filter out the things that are important and would help you control your emotions. These two steps alone will help new investors to clear out most of the nonsense knowledge you hear for you to be a good investor. Because let's face it, a lot of new investors get demotivated to continue because of the data bombarded to us in news and videos. Investing does not have to be complicated. You can outperform a lot of these experts by sticking to the basics of investing. When I was starting, I had no mentor. I was the first investor in the whole lineage of my family. I was bombarded by all the knowledge I thought I needed, and that made me decide investing is not for me, and I should stick to mutual funds. Good thing I was exposed to good books like Peter Lynch's books, Rule Number 1 by Phil Town, and Warren Buffett's teachings. I was studying charts and all these complicated data, which I haven't even used for the years of my investing journey. It's like the ones we studied when we were in grade school or high school. A lot of those things I didn't use in my career, and a lot of those things weren't even applicable to my daily life or financial life. This is the same thing in investing. You have to know how to filter the ones that are useful and what is nonsense for you to survive and stay in the game for a long time. So the last bit of step to end this video is, continue reading books. Don't skip this step. Don't just focus on reading stock market books. Read general finance books as well. I found that most of the financial books that aren't focused on the stock market give out the best lessons that apply to the vast majority of retail investors. Starting to learn from these books will help you remove a lot of the noise and let you create a strategy that well fits your life and your goals. With that said, I hope you've learned something from this video, and if you did and still haven't clicked the like button, I'd appreciate it if you do so before leaving. Thank you, and see you in the next video.